So you found the perfect house. Before it can become this, or that, or even that. Let's find out what it is that lenders look for.
Everybody wants to know about money.
Got to put some money away. This is crucial. Get charged interest between 7 and 23%. Build a credit history.
Give me a loan?
I sure can. You see, Mr. Griffin, what sets us apart from other banks is that other banks are banks. Now, I trust you have collateral.
Collateral's one of 5 different C's of credit. The 5 C's of credit is what a lender is going to use to decide if you're going to get an approval, and if you do, what terms are going to be made available. Here's what a lender is going to look for when it comes to collateral. The type of real estate that it is what's going to play a factor here. Things such as location, how marketable the property is, the more of a down payment that you have, or equity in your home, they all put weight on how a lender views the first C, collateral. Next up, capacity. This relates to whether or not a borrower can afford the added mortgage payment along with any other monthly obligations that they might have. For example, like any debts, property taxes, phone bills, utilities. Lenders want to see that your monthly debts versus your monthly gross income is less than 42%.
You still haven't told me how you expect to pay for that boat.
Are your ratings not where you want them to be? How are you measuring up with upscale people? People with higher ratings are proven to be more successful, more confident, and lead happier lives.
Which leads us to character. The purpose of this is to examine your ability to manage money and seeing how responsible you are with your finances. Payments being made on time, that's a check mark. Bad repayment history, that's not good. So here's what you want to do. Number 1, pay on time. Number 2, limit the total amount of debt and amount of active accounts that you carry. 3, maintain balances of no more than 70% of your limit. You do that and you're gonna master character.
Your vacation's done.
I don't think there's enough here for a vacation.
When it comes to capital, lenders are looking to see how much savings or assets you have left over after your down payment. Always make sure to keep a 3-month minimum reserve of expenses saved, because the last thing you want to do is go all in and be house poor. Conditions, the most important and the one that you have least control over. Lenders tend to be more aggressive in their lending when times are good, and when times are bad, they tend to be more restrictive. So understanding the cycle of the market will help you decide the right time to buy. Pay attention.